What is going on, Ape of the Ape Army? We have a very important AMC update video to get into. We're going to go over a lot of information in this video, and some of the most important things being that the Ortex data is signifying we are seeing a ton of short interest heading back into AMC as the share price is climbing. So this does signify we could see an even bigger short squeeze than we all do think, as well as we have to go over the gamma squeeze and the quadruple witching hour that is going to be taking place tomorrow, and that only happens 4 days out of the entire year. So we're going to see a ton of volatility, and we really have to talk about what this does imply for AMC stock, as well as go over the option chain and the technical analysis, as well as the dark pool data. So I don't want to waste any time getting into this information. The only thing that I do ask is that you tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel. And if there's any video to push out, it is this video. We're going to go over some very important things that all apes should be made aware about that nobody is talking about, and specifically the quadruple witching hour. So getting right into the Ortex data, first things first, guys, keep in mind this is T+2 settlement time. So we just did have trading day for Thursday. So most of this data, not all of this data, is coming back for Tuesday. Keep that in mind. We have a short interest change of 2.72%, return shares of 3.08 million, borrowed shares of 5.43 million. That is a borrow change or a gain to the short interest of 2.35 million shares, bringing our current short interest percentage of free float to almost 13.5%, 13.36% to be exact, and the estimated shares that are currently sold short at 68.34 million, which is quite significant. We do have shares on loan as a total. This does include shares that are sold short, but it's not always shares that have actually been sold short yet, of 86.44 million. Share utilization at 87.41%. So this number is actually going up, signifying that less people are actually willing to sell shares short, and that does signify that we are getting closer to the squeeze, because a lot of these guys that are selling these shares short, they don't want to put up with the potential risk of this short squeeze and lenders defaulting on their short positions. Now, I don't want to waste any more time getting into the quadruple witching. I want all of you guys to understand what is going on here, because tomorrow is very significant, especially with AMC, but the whole market in general. Quadruple witching refers to a day on which stock index futures, stock index options, stock options, and single stock futures expire simultaneously. While stock options contracts and index options expire on the third Friday of every month, all four asset classes expire simultaneously on the third Friday of March, June, September, and December. Quadruple witching is similar to the triple witching days, when 3 out of the 4 markets expire at the same time, or double witching, when 2 markets out of the 4 markets expire at the same time. Key takeaways: quadruple witching refers to on a date which derivatives of stock index futures, stock index options, stock options, and single stock futures expire simultaneously. While it may result in increased volume and arbitrage opportunities, quadruple witching does not necessarily translate to increased volatility in the markets. And it says does not necessarily translate to increased volatility in the markets, but 9 times out of 10 it does, and you will see a lot of liquidity being opened up due to a lot of people that are actually exercising these options across the whole range of the stock market, as well as releasing a lot of collateral that is needed for these options. And if you guys trade options, then you definitely know what I'm talking about, but there's 3 other options classes that are involved with this. So you guys can think of it best as you have a lot of money that gets freed up on these days, and that is the best way overall to think about it. It says quadruple witching days witness heavy trading volume, in part due to the offset of existing futures and options contracts that are profitable. And like I just said, just a ton of volume and liquidity, a lot of portfolio rebalancing, because this only happens 4 days a year. So this is a very significant day going into tomorrow, and I do think AMC did see some of those effects today. They were up 10.06% for regular trading, and they are currently up 0.5% in after hours. So I do expect tomorrow to be a very great day for AMC, probably jump up about 15 to 20%, if not more. Now, I would like to think we get to $100 by the end of the week. That has been my price target in all of these videos. If we don't, then I do think that will happen next week, because a lot of this money being freed up is going to go right back into AMC. Now, that is only my belief. I'm not a financial advisor or a financial planner. I just wear fancy shirts and talk about stocks on YouTube. So don't take this as financial advice. That is not this, and we would trade these totally different. So do what you got to do for your own risk management. Now, getting into the Stockholm tracker, before we actually take a look at the technical analysis, guys, we do have 488,746 contracts that are currently in the money. This number has not changed too much since we have had huge fluctuations. Yesterday, a down pretty significant day, and then up today, a pretty significant day. So it makes sense that the in the money options have stayed relatively the same. Now, I stress this next part in pretty much every single video. The biggest thing you guys have to know is out the money contracts is where it really matters here, especially when you do get really close to that expiration date. And you got to think about it like the market makers think about it, right? Because most options, they expire worthless. About 70 to 90% of total options on the option chain typically expire worthless. So if you have an AMC call, for an example, a $60 call to buy 100 shares, once the stock actually gets to about $59 and you're on a Thursday or Friday and your option expires in 2 days, the market makers aren't going to risk having AMC go to $70 or $80. They're going to start buying those shares to hedge their positions, especially if AMC is seeing a lot of volume. That's really where you start to get that huge volume that's coming in, and you're going up 50 to $1 per second, right? When you're seeing a lot of activity. We have seen that with AMC, especially when they did get halting. That was a lot of gamma hedging and delta hedging that was going on to ensure that the market makers do not lose money, because you could best believe they don't lose money on these options contracts. And to keep the market fluid and to keep the availability of options trading available, that's why market makers do sell you these contracts, even when there's not enough individual investors to actually sell these covered calls. So getting into it a little bit more, guys, out the money contracts at 351,906. This is going to be the very significant key factor that is going to be the driving factor tomorrow and into next week, because the more of these contracts do run in the money, you're going to see a lot of hedging that is going on, because like I just explained, the market makers are not going to take a loss on this. Now, most of the in the money contracts, if not all of the in the money contracts, have already been hedged for, or they are going to be doing that tomorrow. So we're going to see a huge volume day for AMC. We're going to see a lot of contracts that go out the money into the money. Now, the reason why I say a lot of this will carry over into next week, a lot of people that do have winning trades in AMC, if they're not exercising these contracts, they're going to sell them and more than likely roll that over, is what it's called. You sell your winning option and buy another one during the next expiration date or a couple expiration dates out. But I do think a lot of people are going to buy the June 25th expiration dates and try to make more profits from their already profited options contracts. So we're going to see a lot of in the money contracts start to appear, especially after this big day I do think we're going to see tomorrow, as well as a lot of these out the money contracts, guys. We have 107,303 contracts that are currently out the money for June 25th. And I do think this number is going to exponentially increase tomorrow and the first 2 trading days of next week. That is where it's going to be very important to keep an eye on these out the money contracts. Now, taking a look at exactly how high we could go tomorrow and through the rest of next week. Now, the first level, the critical level we will have to pass to see a major rally is the $65 mark, where we have almost 13,000 contracts in open interest. And considering these contracts literally expire at the end of trading tomorrow, you're going to see a lot of hedging that does go on at the $64 price point, in between 64 and 65. So you should see a boost above 65, and then every other options contract has roughly about 5,000 open interest. So you're going to see a lot of hedging that is especially going on tomorrow. But once you get to the 70, you have 28,000 in open interest. And then if we can break past the $73 price point, guys, we're going to see a ton of volume. We're going to see a huge move. We have almost 30,000 contracts at the $73 price point, and then we have 9,000 at the 75, and then the 80 we have 17,000 contracts. That is a lot of shares, guys. Just take 17,000 times 100. That is 17 million shares they would potentially have to buy at the $80 price point just to hedge these options. At the 73, same deal. That's about 29 million shares they would have to buy to hedge their positions. And if all apes are holding the line and not selling their positions, you're going to see a massive increase. And the $70 one alone, that is 28 million shares that they would potentially have to hedge for. So if we can break above the 65, we should get enough gas to go to 70, considering these options will have to be hedged for by the market makers or whoever sold these short tomorrow. Pretty much instantaneously when we are seeing this rally, they are going to be hedged for. The only thing that is key here now, guys, if people do actually hold on to their shares, because I think we have a huge rally coming tomorrow and into next week.